Good morning, everyone. Thank you for the invitation to join the event today. Tomas Otterström is my name. I'm heading the Sustainable Finance and Corporate Sustainability business at KPMG. Been acting as the global lead for sustainable finance services at KPMG for a few years. And indeed, climate change is in a key way linked to sustainable finance these days, green finance and so forth. KPMG is a professional services firm known for its audit, advisory, tax and legal services. And indeed, as part of that, we do a lot of work with clients these days on supporting them on their journey to net zero. And on approaching climate change in a sensible way. Now, I'd like to share with you the observations we see from a business perspective, because that's the role that we are normally asked to take and see the business impacts of climate change. So first of all, during the last 2 years, we've seen a remarkable change in the approach of corporates and clients overall towards climate change, and a lot of more credible actions, more commitment, more ambition. And I think that there are 3 good reasons for that. First of all, there is the insight that climate change really has financial impacts on corporates, on all rows of the profit and loss statement, if you like, and also on the balance sheet. And secondly, there is, of course, a good political backup of climate action, targets, and also regulation that starts having an impact. And thirdly, I would say very straightforward, climate change has become visible and tangible. And that's perhaps not what we are wishing for, but that's what we all know is happening, and that's not unnoticed by the business community. Of course, talking about the financial impact, quite tangible impacts are stranded assets, insurance premium pressures, and also credit risk for the financial sector. And in addition, consumers' choices are increasingly informed by climate impact, and we can also see how climate change has an impact on the supply chains. We provide different kind of assurance, verification, validation, third-party view services as part of the overall climate decarbonization services. And we actually also cooperate with Climate Analytics Finland when it comes to carbon removals and how to measure those and provide a verification. But the point I would like to make in this context is that the business-driven strategy or approach on climate change is not only about managing emissions, even though in the big picture, of course, that's absolutely a crucial element of that approach, has to be part of it. But it's also about understanding the change on the operative environment caused by climate change and other drivers. It's about analyzing the regulatory impact on corporates and the market dynamics overall, getting an insight in stakeholder expectations and how to address those in a sensible way. Assessing the business opportunities and risks, and I like to stress the opportunities, of course, in parallel to all the risks that tend to get the focus too much sometimes. Governance practices, engaging with and reporting to stakeholders are all part of such a strategic approach. We did an analysis, a survey, together with Evershed Sutherland, where we interviewed more than 500 executives from world's leading companies. And a few findings from that. And I think it's encouraging to see that, first of all, climate change and decarbonization really are a significant boardroom issue these days, and it's realized that it requires action. Secondly, it's considered climate risk in particular a very serious business issue, and also there is a realization that it's about financial risk. Thirdly, corporates and the executives feel quite a strong pressure to implement decarbonization strategies, which of course is a good thing with regard to our climate. And also investors are quite focused on climate change these days. Clearly most of all the ESG topics that need to be considered. And we can also see impacts on the people agenda. The demand for expertise in this area is quite high, and we can clearly see that there is a shortage of expertise. So a lot of education, training needs to take place. And there still are some critical barriers for decarbonization business, in particular high costs, lack of expertise and technology, which are all addressable, of course. Now, encouraging is to see that corporates are setting targets. And this is a comparison between the situation 2017 and 2020. We do every second or every third year a global survey of the biggest corporates reporting in this area. 5,000 companies in the last round, and G250 are the global 250 biggest corporates in the world. Another thing is, however, that not all of these targets are ambitious enough, not even 2020. And the second thing, crucially, is the credibility of actions, short-term actions, backing up these targets. There is a lot of work to be done still. Anyway, development is encouraging. A key aspect is to ask the financial markets if they are able to price in the climate risk and climate opportunity, for that sake, in their investment decisions. And this is for another thought leadership we produced, Capital Markets Save the Planet, where unfortunately results are not that encouraging. We can see that when it comes to equities, more than half of the investors asked are of the opinion that climate change really isn't priced into the equities. And the result is even lower for alternative investments in private markets or bonds in public markets. I like to end with this slide, and you probably are all familiar with the TCFD on the Task Force for Climate Risk Disclosures, where the approach clearly is a very financial one. So which are the impacts on the profit and loss statement of the transition and also on the physical impacts of climate change. I believe that this is the level we need to reach for the business community to understand the implications. But how is climate change impacting every row in the profit and loss statement? Sales, costs, liabilities, and so forth, and in the end, the financial result. Thank you very much.